Let's talk accounting. I know. It's the unsexy side of running a business, but that's what we're going to dive into today is, do you really need an accountant? Why accountants are like going to be your best friends, and even how to find accountants that don't make you feel like an idiot. If this is your first time joining me, my name is Tara Walsh. I'm a business coach for beauty business owners. All right, so I met with my accountant yesterday. In fact, I make it a regular practice once a quarter to meet with my accountant because he is the financial guru to how businesses, not just my business, but all businesses run, and he has many different business models. So I like to schedule time to pick his brain. First, we review kind of where the business is at. He tells me how much I'm going to owe for quarterly taxes. Because guess what? If your business is profitable, right? We have to know our profit, money coming in versus money going out. If your business is profitable, you're going to owe quarterly taxes. Again, just US. If you're outside the US, I don't know your tax laws. But you're going to owe quarterly taxes. And if you don't, there can be penalties associated with that. So something to keep in mind once your business starts making money, more money than you're spending. Good morning. So I meet with my accountant. We talk about the past quarter. I give him my plan of what I think I'm going to do this next quarter, or here are my goals. So this past meeting yesterday, I said, here's what I want to do this year. Here's a % of profit that I'm aiming for. And he's been in business before himself. He has his own accounting firm. And so we sat and talked strategy of what that actually looks like. One thing that I've struggled with that I'm still trying to wrap my head around, because it's a lot of data and it's a lot of spreadsheet work, is budgeting and forecasting. So if my goal is to do X amount of dollars this year, what does that look like? Knowing that, like, yes, okay, if I divided this total number by 12 months, great, that sounds like a good plan. But typically, there's growth in the business. So January is probably not going to be as high of sales as it would be later on in the year when I've launched new programs or I've increased my membership. And so he helped me to build out what it would look like, so I have a society membership, right? So it's a monthly membership. Each month we have a percentage drop off. It's called churn or a retention rate. And so it used, we have this many members now. And if each month, 6%, 5%, 4% drop off, what does it look like next month? When do we need to launch again to get new members into the program so that will grow our revenue? So he sat down with me and helped me map that out. So I have a general understanding, right? It's not exact science because we'll have to see. We'll have to check in next quarter to see how first quarter went and adjust our forecasting based on what actually happened. Most accountants live in the past, right? They just look at what the past data is telling you. And it's really awesome to have either a financial advisor or your CPA, your certified public accountant, help you to build out in the future based on past data, if that makes sense. So last year, the business was profitable, a really good chunk of profit. And I want to keep that, which means that I can't just keep blowing money into my business. Like, oh, I have extra money. Let's reinvest back into the business. I have priorities to pay myself more, to build out a team, and also make sure there's profit. Those are my 3 big goals: to be able to pay myself more, invest back into the business by way of team members, as well as saving and planning for profit. That doesn't happen without a plan. And a CPA can be your best friend, your kind of Yoda to help you get there. Because there's a lot of you that just keep your head in the sand when it comes to finances, right? It's like, I don't want to know, but finances, the data, not the money meaning, the data that the financial accounting aspect of your business can give you can help you make informed decisions. And it can help take the fear out of running your business off the table. Then it just becomes about the numbers. So if you don't have many clients now and you want to make 6 figures this year, well, yeah, that can seem pretty overwhelming when you're barely doing $1,000 a month, yet 6 figures is $8,333 a month. Right? You got a long gap to go. But instead of going, oh, I'll never get there, you can break it down. Okay, the first goal is for me to be making $2,000 a month. So in order to do that, I need to get 10 new clients in this month. What is that broken down into a week? Well, that's about 2 to 3 new clients in a week. Okay, can I work on one task today that I think might get me in 1 client? What can I do today to get me in 1 client? Right? Then it becomes so much easier. I'm just focusing on what can I do today to get in 1 client, as opposed to looking at, I'm never going to make 6 figures because I'm not making $1,000 a month and I need to be at least an average of $8,300 a month. So do you see where the data really can help inform what decisions to make next? If you don't have that many clients, don't be investing in more lash trainings. You need more clients first to pay for the lash training that you then have clients to upsell this new training to, or get better results, or get them to come back because they don't come back because you don't understand retention. It's a matter of chicken before the egg, if that makes sense. A lot A lot of lash artists think that if I just got better at my skill set, then my business would be successful. When it's actually your business demand works first, which is marketing. And then you can invest in continuing education, higher price services, add-ons, upsells, retail, all of that stuff. But first, you need to understand how to create demand. And a lot of that can be working out the numbers. We do goal planning all the time inside this society. We actually just had a goal planning masterclass. But anytime somebody's like, here's where I want to be, I don't know how to get there, we start with the end in mind. We look at the data and we start with the end in mind. We look at where they're at and then build steps to get there so it's less overwhelming. We pick goals that we focus on those goals without the shiny objects coming in, and we get that goal to completion before we start another goal. Otherwise, that's where the overwhelm comes in. Well, I want to take a microblading training. I want to do lash courses. I want to become an educator. I want to have a product line. I want to build out a team. And it's all of these different things when really all you want to do is to be able to pay yourself. Right? Yet, and you'll be surprised, those that are in the 6-figure range, a lot of them, when they come to me, they're making 6 figures in their business, but they're barely paying themselves 20 grand a year. Everything goes back into the business, and we got to have a little check-in of why are we doing what we're doing, right? Like if your business is doing $100,000, but you're spending $99,999,000, we've got a little bit of an issue here. We've got a misalignment of why we're in business. You need to take care of yourself first. Keep the business open, right? Run the business at a break even, pay yourself a livable wage so that you're not making decisions based on scarcity and lack of money. Because if you're in survival mode personally, you're going to make very, very poor decisions in business. Believe me, I've been there many times. It's going to blow your mind, guys. I've spent $30,000 on Facebook ads for a 1-month period when we did a launch right before the pandemic, right? It was March. Spent 30 grand in Facebook ads for a launch in March of 2020. Now, granted, that month we did $50,000, but not all of the revenue that we generated went to ads. I just this past year finished paying off the debt from that because, as the industry tanked, so did the business, so did the Lashpreneur. We had members drop off and it was hard to stay on top of that. That's also accruing interest, right? I was paying $400 a month just in interest because that debt kept continuing to carry on. I made a lot of scarcity decisions and stressed out my team because I was trying to pay that debt off for almost 2 years, right? So it can be, data is power, and your accountant should be somebody that you trust, that you feel comfortable with to teach you the things that you don't know, right? It's okay if you don't understand all the ins and outs of accounting. I don't know how you would. I even took an accounting class in college. I was a business management degree, and part of it was understanding a profit and loss statement. When I got into business 10 years later for myself, I had to relearn all that stuff because I was in college. I wasn't paying attention to what that actually meant. Here's the income, here's the expenses, and whatever's left over is either profit or loss. So learn this stuff. It is behoove you, if you want to have a business, to treat it like a business. Think of yourself as a business owner, not just a hobby, and I'm just going to be blind to what's going on in my business. That's not how Steve Jobs, Bill Gates, pick your celebrity or pick your successful company looks at their business. You need that data to make informed decisions. You need that data to inform where to invest, where to pull back, where to pay yourself more, so that you can have the freedom that comes with having your own business. You may not need to work as much as you think you do. You may need to raise your prices and drop off some of those cheaper clients that you love so much, but in reality, they're costing you your business and your freedom. So I'm excited. I'm interviewing small business CPA on the podcast today. I want to know what questions you guys have for accountants. We are specifically going to talk about the changes to Venmo and other forms of payment and why they may or may not be a great idea. So if you have any questions on how that works, leave me a message here and I'll make sure I ask her. You could talk about how do I start to pay myself? How much do I set aside for taxes? Any of those questions that you have, how to find an accountant, how to know if an accountant is good or bad. I have had some terrible accountants. In fact, I've had 3 terrible accountants. I finally, because I interviewed several accountants, have a great one now that I feel comfortable with. I don't feel dumb. My very first accountant made me feel like an idiot. She would spout out words that I didn't understand. And I just kind of look at her, I'm like, can you explain that to me? And she'd be like, Google it. And I was like, oh, okay. Well, then why am I paying you? So there are accountants that just want to do the bare minimum. And there's also accountants that really want you to understand because it actually makes their life easier. If I understand my business finances and I come to them for advice or, hey, is this the right strategy? I mean, some accountants really actually enjoy that from their customers. Otherwise, they're just sitting in front of spreadsheets, and some of them just want to do that. But there is a difference between an accountant and a bookkeeper. I will make that distinction. Your accountant really is more for the tax strategy. The bookkeeper is the day-to-day categorization of your expenses. So like if you buy supplies, a bookkeeper would make sure inside of your bookkeeping software that expense, that purchase goes into the supplies bucket of your profit and loss statement. Now, most of you probably won't need a bookkeeper until you're past 6 figures because you're probably not doing so many transactions that it would be worth your money to invest in somebody bookkeeping. You can learn how to do bookkeeping with an accountant. So if an accountant says, okay, we need to set up your profit and loss statement, and you have a transaction come up and you're like, I don't know where to put this inside of this bookkeeping software. I use and recommend QuickBooks. It's like the gold standard for accounting software. Let me know if you need a link to that. I think I can get you guys 50% off of 3 months for QuickBooks. Otherwise it's like $15 a month. It's not terribly expensive, but it's almost like dating apps, QuickBooks is, because you'll see the transaction pop up and then you kind of just swipe and select which category it goes in. And if you ever have a question, you can ask your accountant, hey, I drove to go pick up new bed sheets. Can I write off that expense? What would I categorize it under? And that they can just let you know real quick because it makes their life easier. At the end of the year, everything's already in QuickBooks. They don't need to you don't need to come in with your shoebox of receipts to sit there and try and categorize it then. So I highly recommend an accountant. Look for them now, interview a couple, find somebody that you feel like you can ask questions to. April, awesome. Will you DM me and I'll send it directly to you in the DMs if you want the link to QuickBooks. There's new things coming out with the IRS. We should have a great relationship with our accountants. 100%. Tax law, especially in California, I feel like California's laws and with hiring, with employment laws and tax, and obviously federal tax laws change all the time. There's no way you would possibly know. That's why accountants have jobs. That's why they are. If you get audited by the IRS, your accountant is your first line of defense to make sure everything was done legally and should be tracking everything and making sure that it's not this big scary thing that you didn't owe the correct amount of taxes. So yeah, I agree 100%. There's things that whether you are aware of them or not, that you will be held accountable to. So I would get all of the expert help that you can. Let's see. Thanks for all the reminders to help better set priorities for the new year. You are so welcome. Such a powerful conversation. Thank you. Awesome. I'm always glad you talk about this because I have no idea how to handle this. April, we got you covered in the society, girl. We have a whole training on biz finance. I think we call it Biz Finance 101 now. I know, I kind of get excited about seeing my accountant too. It's weird. That was not me several years ago. In fact, it was 2018 that I was like, I really want to feel comfortable with business finance because I was the same as you guys. I kept my head in the sand. I was just like, as long as there's money left over in the account, I'll just assume that's good. That's not a safe way to run a business, especially if you ever want that business to provide for you, if you are ever going to apply for a loan, if you want your business to benefit your life financially in any way, you got to have a handle on the finances, right? Because otherwise you run into, it's so common, you guys. It's so common for women in our industry to feel unsure about finances and just put blinders onto it, when in reality that's causing you more stress and strain. So happy to answer any financial questions you guys have. Let me see. There is one that popped up. Oh, awesome. You guys have great questions. I don't know if I should stay sole proprietor or go LLC was one of the questions. Awesome question. Again, your accountant is going to be your best go-to for that. So generally, again, I'm not an accountant. Don't take this as accounting advice. I'm also not an attorney. You're going to want to look at your personal assets versus also your goals for the business. Now, some states, it's real easy and real inexpensive to be an LLC. I think in Arizona, if I'm not mistaken, if you file as an LLC, I don't know that you pay annually to keep the LLC. In California, it's $800 a year to be an LLC. The difference between the two, a sole proprietor is basically when you start a business and you don't do anything else, you are a sole proprietor. The government, as far as the IRS, doesn't see any difference between the business income and your personal income. It's all together. when you start to become any sort of corporation, so an LLC is a limited liability corporation, there then becomes a distinction between what the business does and you personally as an individual. You basically become an officer of the business. You can put yourself on payroll. There's different ways and tax strategies to do payroll versus profit distributions that are taxed differently. There's a whole, and again, this is all stuff I learned from accountants, right? I had to understand that and the benefits and the different write-offs you could do. So that would be a great question to ask an accountant, because it will be different for each of you and it will depend on your state. Here in Tennessee, it's actually only $300 a year to be an LLC. So I'm transferring the LLC from California to Tennessee. Again, my accountant is helping me do that because I don't know how to do that. I've never done that before, nor do I want to, but I also want to save $500 a year and have everything where I live now. What type of POS systems should we be using as a small business? So that's point of sale. Really depends. So my go-to for online booking is Acuity. And I personally, in the business, use Stripe. We sometimes use PayPal, but I don't love PayPal for businesses. PayPal always tends to side with the customer, so I don't recommend it. Square is a really popular one as well. But really, if you have an online booking software and they already have an integration with a credit card processor, I would just go with that. You're always going to be paying, a certain amount of change for each transaction, anywhere from like 14 to 20 cents per transaction. And then you're also going to pay a percentage of the total sale in your credit card processing fees. Those are write-offs. Those are the cost of doing business. Those are the costs of you offering the convenience of a person using credit card. I don't recommend Venmo, Cash App, all the other different ways, Zelle, like ways that you can try and hide money, right? Like, oh, it's just a transfer between friends to avoid paying the credit card fees. That's such a small game to play. You're playing so small and you're actually robbing yourself of the opportunity. Plus, you're also having money come in from so many different sources that it's really hard to keep track of it. And ultimately, if you get audited, you are responsible for proving that every dollar that came into the business was for business. And it's harder to do that when it's friend transfers, right? I like to keep the accounting clean. If you guys ever want to sell your business, you need very clean accounting. And you also need to show the value of the business. And if you've hid money, if you didn't claim your cash, if you didn't claim tips, the business doesn't look as valuable as it actually is in reality. Thus, it will lower the value of it if you ever want to sell your business. If you ever want to apply for a loan or get a house or a car that you need a loan for, if you haven't been claiming that on your tax returns, no bank is going to just trust the word that you made 10 grand in tips on top of what you have on your tax returns just because you said so. That's not how that works. Banks want a paper trail. They want very low risk. And if you're hiding money, they're not going to believe what you have to say. Because I could go in there and say, like, I do $1 million. It just didn't deposit it in the bank. It's all in a mattress in the back. They're going to be like, okay, well, bring that money in and let's use that as cash. And you're like, I don't have it anymore. I'm sorry. Since I just started making income in the last 2 months, should I document now? You should always document every dollar that comes in. I don't care if you're like writing it down. Sally paid this, and then so if you go into the prep and planning guide, lashpreneur.com/prep and planning guide, it's a link in a bio. We have kind of when you're just starting out, the things to have, including a business bank account. So what I did in California was I created my business name. I went and filed the fictitious, what do they call it? Fictitious business name, FBN. So basically, if your name is not your service by your name, then it's a fictitious business name. You just need to register it. It's usually $15. It's just the way of you claiming that name in your state. Then after that, once you have that, you can then go open a business bank account. There may be some other things in there, but I'm pretty sure as long as you have the fictitious business name and you've registered your business with your local city, you can then open a business bank account. That was step one for me before ever putting a deposit down on a place, before ever, signing a lease, anything like that. Those were the first two steps. That way I had a card, or I could get a credit card if I needed to have business only expenses tracked for business bank account. That way my personal money wasn't being used for business expenses and I wasn't using business income to buy groceries. There was a very clear paper trail between what was the business money, even as a sole proprietor, what was business money and expenses, and what was Tara's money and expenses. Otherwise, it's called commingling. And that's white collar crime, right? Like, I'm just going to use the business profit to pay for my groceries and I'm just going to charge it on my business credit card. No. We don't want to do that. You want to make sure that you have your business bank account, then you can easily transfer money into your personal bank account. I recommend having them from the same bank. That way it's not like all these complications. Just open up with wherever you do banking, open up a business bank account, the same bank. You'll be able to easily transfer money back and forth. And it shows a paper trail, digital paper trail, for every transaction that is business related so that you can write that stuff off. And that will end up saving you on your tax. DBA, doing business as, yes. They also call it fictitious business name too, but yes, DBA, they take, the percent they take for POS is a write-off. Yes. So her question is the percent that the credit card companies take as their fees is a write-off. Yes, it's a business expense. It is the cost of doing business, right? Somebody swipes a card. Well, in order for them to swipe the card, you have to pay the percentages. Typically what happens with credit card companies, credit card processing companies, is they will remove the fee before they transfer it into your bank account. So if somebody pays $50, then they'll take out their percentage before they ever transfer it over to you. But they will send you, if you've done over $600, a 1099-K, maybe. They'll send you a form at the end of the year that you can give to your accountant as like, hey, these were the credit card processing fees I paid, and that will be a write-off. Because your online booking or your point of sale will show, oh, she did $100,000, but your bank account will only show, what transferred into the bank account. This is where QuickBooks helps because it can get clear as to, okay, this is the money that came into account because the credit card processing fees were already taken out before that money hit the account. So your bank account may say, the income this year was $90,500, but really the point of sale machine is telling you did $100,000 this year. It's because the credit card fees were already taken out, if that makes sense. It's kind of like taxes. Do you guys get happy that you pay taxes? Because you should. If you're paying taxes, that means that your business is doing well. I know. My dad's like always like, oh, I hate paying taxes. I'm like, Dad, it means you're making enough money to pay taxes. Because there's quite a few years, guys, where I got a tax return every year, and I looked forward to it. But it's because I didn't make enough to have to owe taxes. Anybody been there? You're like, woohoo! Couple thousand back in tax returns. Yeah, it's because, unless you overpaid in taxes, in which case an accountant can help make sure you're not doing that, because it's better to have that money in your pocket than it is sitting in the government bank account throughout the year. But you should be owing taxes because that means that you're profitable. That means that you're successful. That means that your business is growing. So it's annoying, but it's not your money in the first place, right? You get that? When you owe taxes, that's not actually money that was yours in the first place. So you've been keeping it for the government, but in order to run a business in the city, state, country that you live in, that is the cost of you being able to do a business. So that money, I never looked at it as my money anyways. And what's beautiful, and I do recommend, I don't follow it strictly now, but if you've never heard of Profit First, it's a book and kind of a whole accounting methodology. That was where I started because it makes it really simple to start in learning how to do accounting and how to pay yourself. Because basically you have buckets, bank accounts of buckets. So certain percent goes into taxes, certain percent goes into operating expenses, a certain percent goes into owner's pay. And that was where I started learning more and more about accounting. It was called Profit First. Again, if you need a link, DM me, let me know. But I have never not had more than enough money set aside for taxes by following that. So that's been really cool. Because here's the thing, when I have extra money in the tax account, what I end up doing, just again, not financial advice. I'm not your financial advisor. I will either pay myself extra as a bonus at the end of the quarter if I have extra money in the tax account that I don't owe because I oversaved. I can save it again for future quarters, or I end up putting it into my retirement account. And so that's also a tax saving strategy because it's going into a retirement account as opposed to income that's then being put into a retirement account. So again, your accountant can help you with all that because retirement is going to sneak up on you. And, I'm in my mid 30s now, so I'm thinking ahead, but in my 20s, I wasn't saving for retirement. So if you're in your 20s, that's the time to do it. It's called compounding interest. It's a really cool way to build up a lot more money for retirement. All right. I just quit somewhere that she said I have to pay taxes when I had started, and she's telling me I'm not a 1099. I thought automatically was because I'm paying my own taxes. Well, that's weird. Okay, so that is a huge distinction. April, I'm not quite sure about that. If you want to talk about that inside the society, but honestly, your accountant's probably the better place to go. I don't know what you signed. If you're a 1099, they do not pay your taxes. That's a way that they skirt the issue of payroll taxes. Because when you're an employee, there's totally blanking on the name of it, but you're going to owe 15% taxes as a business owner. Your self-employed taxes are 15%. Now, when you are an employee of somebody, the employer will pay half of that by payroll taxes, your Medicare, your Social Security, all that kind of stuff. So 7.5% is what the business pays on your part, and then you on your personal tax return as an employee will owe the other 7.5%, so that you're getting the 15% of employment taxes. When you are a 1099, you are self-employed. You are not an employee of that business. No matter how they treat you, according to the government, you are not an employee. Therefore, you will owe 15% of your revenue in taxes. Profit. I think it's profit. I don't know. Again, accounting questions because I don't know the nitty-gritty details of it. But that's oftentimes why salon owners will do 1099s illegally, right? Because they're trying to skirt paying those taxes because it's more of an expense on them. Yet they treat you like an employee. They require you to show up at certain times. They book your clientele for you. They tell you how to apply things. They want you to be on brand of their brand. They tell you your working hours, your shifts. They have you sign non-competes. From my understanding, non-competes don't apply to an independent contractor relationship, because the nature of what you do is independent of that business. So you should be able to take clients at any time doing the service that you do, because you're providing a lash service for this business. You should be able, as an independent contractor, to go take clients and provide that service for other clients. The salon is a client of yours that you are providing a service for as a 1099, if they're going to do it legally. So basically, we just look at that as booth rent. But if they are having any element of control over your work, you're not actually a 1099. You're a misclassified employee, and that is a lawsuit, right? So your Department of Labor can help you file a misclassification wage, and oftentimes this will bankrupt the salon owner, because it's not just a penalty for doing it in the first place. It is back pay from when you started and all the other misclassified employees, because it's open Pandora's box. So they owe back wages for all of the minimum wage hours they missed. And there's penalties and fees for however long it takes for them to get caught up. And they have to reclassify everybody at that point into being an employee, which means that their pay structure likely changes. Because if you're at 50% commission and you have to go to an employee, I haven't seen it work where somebody who is legally classified as an employee can pay somebody 50% commission. It's not profitable at all. Unless you're charging like extraordinary prices, which most people can't. So it's a huge issue, and a very, very serious issue for the business owner when they misclassify. So if you ever want to have employees or build out a team, it's either booth rent or employees. Don't even entertain any other option. I don't care who's doing it in your city, how you were classified when you were a new business or when you were a new lash artist. Most people do it wrong because it's monkey see, monkey do. Oh, well, that's how I was treated, so it must be legal. No, y'all know that people don't focus on the business side of things. That's why you follow me. All right. Yeah, April, it sounds like you were misclassified. Let me know if you have more questions. If I haven't established my business with the state and I don't have an EIN number, can I still do my taxes for my aesthetic nail side hustle? Okay, so again, great questions for an accountant. I always want to refer back to them. An EIN, I don't think you need that until you become some version of a corporation, LLC. Because as a sole proprietor, you'll use your social security number. You can file an EIN, but I don't believe they require it until you're an LLC, S corp, corporation, partnership, those kinds of things. But I haven't established my business with the state. Yeah, I would check in with an accountant on that. Because it'll depend. So if you're looking at 2021 taxes, I mean, really any money you made on your business, I don't want to tell you that wouldn't count because it was business income. So, but if you don't, if you weren't profitable, so if you only made $1,000 over all of 2021, you probably spent that much on certifications, supplies, all that kind of stuff. So you may not owe taxes on that income. But again, your accountant can walk you through the legalities in your state. Yes, don't need the EIN. Okay, great, yeah. Because I didn't get an EIN until I became an LLC. And then and that was just so when I hired on team members, I didn't have to give out my personal social security number too. So it was also protection for me. That's the beauty about the LLC. There's the tax standpoint, then there's also the legal standpoint. So for instance, if you're an LLC and you get sued, somebody is suing the business, not you individually. When you're a sole proprietor, legally, if somebody sues you, they sue you. Whatever you do for the business and any personal assets you have are up for rewards for or awards for a lawsuit. So if I'm a sole proprietor and somebody trips in my parking lot and they sue me, if I have a house, if I have a car, if I have money in a bank account, me personally, that can be a part of the lawsuit that I have to pay them out of. When you're an LLC, they can sue the business, they can shut the business down, but your personal assets are protected because you are an employee of the LLC. So worst case scenario, the LLC shuts down, goes bankrupt, but you personally are protected. Again, talk with an attorney, but those are usually the benefits of going LLC versus sole proprietor. But also it may not make sense if you're just doing, under 100K or under 50K. It just really depends on your state and your personal assets and the advice of your accountant and your lawyer. All right, guys, I actually have to get ready for my interview with small business CPA, Michelle. She's a hairstylist turned accountant. Usually I think they go the other way, right? Like, oh, I hate accounting, I'm gonna go do hair. No, she was the other way around. So I'm looking forward to that. Episode will be out not next week, but I think the following week. This upcoming Monday, we release our podcast on Monday. We are going to be talking about how I created a viral reel. I'm not going to talk about the hate that I got on that reel from one particular person who told me I was hideous and had a low IQ. You can watch the live I did yesterday on that. But I am going to teach you the steps that I do every time I create a reel to try and create a viral reel that gets a lot more views and a lot more engagement. So that is coming out on Monday. When will we be able to listen to the podcast? Monday. So we switched our releases to Monday. So every Monday, a new podcast on the Lessons of a Lashpreneur show, wherever you listen to podcasts. We also have, we also write it out as a blog too. So we have the audio and a blog on our website, thelashpreneur.com/blog. I adore you guys. Thanks so much for hanging out with me and talking the sexy stuff of accounting that you didn't know that was part of running a business. It's so fun, but one of those necessary evils, and it really can work for you. All right, guys, have a good one. Go make some money. Bye.